Hi, welcome to the Market Alert for December the 9th, 2014. And starting off with yesterday's session, looking at the 5-minute chart, you can see that we had professional buying coming into the market at the 17,900 level there. You can see driving up and moving all the way up to the next psychological level of 17,950. And then you can see how this was a ceiling for this market, so it kept coming up and banging its head against this level, and then eventually we see the market moving back down to where it opened. We see the market being tested here. You've got a lot of volume and the market then attempting to move higher, but again it starts to bang its head against the 17,900, and then before you know it the market's down at 17,850, and then all the way down to the 17,800 level. So if you ever wanted to see or have a perfect example of how this market trades to these psychological levels, or if it breaks through down to the next one, this is the chart to actually look at, and you can see that absolutely beautifully set up there to trade up to the new all-time high as well that we had yesterday. Just to pop this one in for you so you can see 17,953, which isn't the all-time high, sorry, because 17,986 is the all-time high. But yesterday trading up to the 17,950, and again that becoming the resistance and moving all the way back down then to the 17,800 level. So now we see the market finding some support, and again you can see there the market coming off the lows in this selling bar, which I've spoken about before, generally an indication that there is some support in the market. We see the market reverse, and then it trades up to the 17,850 level there before giving a sell signal later on in the session. This is at 10 past 8, an hour before the end of the session, and then we see some buying coming into the market, which is interesting. We've gone through the psychological level, the orders being filled down at the low of the buying bar, and then we see the market reverse and come straight back up, and then we see some selling follow this, and then prices moving sideways to lower for the rest of the session. So obviously there was some news out at this point that got the market to reverse and turn back to the upside, because if you look at the previous bars there is no volume at all. So when the market gave the sell signal, this is just unfortunate, the market's reaction was to move back to the upside. And then what's interesting here, if you look at the finer detail, you can see that the bar here, this upthrust, this is a selling pressure upthrust, because you've got very high volume compared to the previous buying bar, but the range of this bar is narrower, and then we see the market's reaction to this thereafter just trading sideways. And then on the overnight market you've seen prices drift lower there. So in the daily chart we've got a down bar for yesterday, plus we've got an increase in selling as well. So are we starting to see the beginning of this market turn? We're not going to do the 18,000, which I was hoping for. Well, there's a way to actually gauge this, and what I'm going to do is to mark up on the charts using the fib retracement tool. I'm going to go to the recent high down to the recent low, which is a low of yesterday, and I'm going to mark up a 76% retracement there. And if the market can trade back up to this level, fail to close, and that's the crucial bit, fail to close above this, then we are likely to see prices move to the downside there. No major economic news for the US again today, apart from 3 p.m. when we've got the JOLTS job openings. It's a medium impact news item though, forecast at 4.81 and a previous 4.74. So again, depending what happens around this time, but it's a medium impact news item for the US at 3 p.m. there. Finally, on the implied volatility front, an increase yesterday from 630 to 656 and 11.74, if I recall, to 12.41 for the implied volatility, and that's because the market moved lower during yesterday's trading session. which of course will move the volatilities to the upside there, which is exactly what we see. Right, that's it from me this morning. I will see you in tomorrow's edition of the Market Alert. As ever, thank you for your support, very much appreciated. And as ever, also for watching. See you in the next one.